Good morning, traders. Manny Cabrera here, founder of MDC Trading Academy, with today's pre-market forecast for Wednesday, October the 6th. Let's jump at our news items this morning. Wednesday, we have crude inventories at 10:30. Remember, crude inventory is at its highest since the last 3 years, and it continues to climb. We do have some ADP non-employment change coming up shortly. And of course, tomorrow, unemployment claims, and we close with more unemployment information. What's happening in the markets, my friend? The market right now is suspended animation between areas, right between this, right below the 80 SMA. We've had exactly 1, 2, 3 days that we're seeing the market pretty much kind of dance around the same areas for a while on pretty decent volume, but friends, it's still Rocktober. Then you take options expiration week and you add it into the mix. You got yourself a pretty interesting market to trade. Again, volume is there, volatility is there, but it's not the most efficient moving market, and I can show you that exactly what I mean by that in a moment as we jump to our next time frame here. As you can see, here's the market oscillating between these two particular areas, resistance and support. But look at the ugly movement in this market. Strong runs, choppiness, choppy runs up, choppy runs down, strong runs up, strong runs down. Just this mess here is back, but on a grander scale now between these two oscillating areas. Very difficult to find areas of support and resistance that hold because the market doesn't seem to be respecting anything. It just looks like a market that's been spooked. It's to me, it's been a while since I've seen a market this way, but the market seems spooked to me. It seems like it just does not understand what it wants to do, and it's causing havoc in trading accounts because it is difficult to trade markets like this. Here's an example. Okay, here's yesterday. Market begins very clear support and resistance area. Basically, this is where the market was. After this, resistance becomes support. So this is where the market was. Nothing happening here. Market clearly breaks through, huge retracements. Then it can't reach our trade area. Then it pops up, can't reach our trade areas. Then it finally reaches our trade area, blows by the stops. Then it runs completely without being able to access it. Then it finally gets to our trade areas and it busts right through our trade areas. It's just a very difficult market trade. Look at this movement here. It's not a very clean up, down, run with trades. It's a very choppy, very indiscriminate kind of whipsaw kind of activity in the market. And that's what I'm referring to. In spite of the fact that we do have, volume. Here we go, market breaking through the intraday low of yesterday, trying to find resistance there. Pops down. Here's the support. Here's the resistance. Here's where the market is right now. And this is what I drew before this morning. Market's going to come retest this area. This is where it's doing right now. Two things can happen. It can rebuff it and come right back to this trend line here. It can break above it, hold support, and continue. It can be a fake out breakout. It can break this particular trend line here, come back, whipsaw, and act as resistance and launch itself down here. It can use this as support, launch itself up, or it can clearly break through, use resistance, and move lower. Very rarely do we look at the market. We have so many options. But which way it's going to go, again, this is the type of very indiscriminate market. It's very difficult to pin a decision because of what's happening in the market, in the relative movement of the market. Now, typically, the S&P market, which is why we trade it, is a market that trends very well when it's trading. When it breaks area, it tends to run. And the runs continue. The runs are very predictable. Runs retracements, very measured returns, very measured retracements to high probability areas. It's not happening in the last several days. So again, the key today is make sure you place your stops first. Do not be tempted to keep increasing your stops. This thing can whipsaw you real quick. Wait for runs. Wait for confirmation of runs. You can't go wrong trading. You cannot go wrong trading the trend. So I would wait for breakouts and wait for potential confirmations of potential trends. Place your stops and let them ride. Take care. Have a great session.